Hey everybody, Glenn Tompkins here at VectorVest. So today I'm going to start off a new segment called Midday Parlay. It's going to be short videos that you can look at during your lunch hour that you can take advantage of. So if you're interested in sitting down to talk with me, you sit right there. Hi everybody, Glenn Tompkins, Senior Instructor here at VectorVest, and I'm going to try a whole brand new segment. So I want you to, one, if you haven't already, please subscribe to the channel. Number two, hit the bell icon to be alerted to updated information or videos that come out. And big thing here today, I want you to like this video. Why? Because the more you like it, the more YouTube will share it out to the population. So I want you to do a concerted effort to really like the video. All right, so that we can share this out there with everybody. Once again, welcome to my first initial installment of Midday Parlay, where we're going to talk about some of the things that are popping up in the market, but it's going to be nice and concise so that you can go watch it on your lunch break and then go back to work. All right, let's get right into it. So what is something that big is happening? Castor Maritime announces a reverse stock split to be effective May 28th. I've talked a lot about this stock. It is a low dollar stock. It is a speculative play. It's not for everybody. So I'm sitting in the same boat with a lot of you. I own the stock and it's been a hurt locker to be in. But I know that overall the stock has got some potential, and we're going to talk about that today. So in Castor Maritime, doing a reverse stock split, 1 for 10. So if you own 10 shares, you're now only going to get 1. And what's the big thing about this? The reverse stock split is undertaken with the objective of meeting the minimum of a $1 per share requirement for maintaining the listing of the company's common shares on the NASDAQ. Again, this has been a really tough play. A lot of you are holding because you know that it does have some value going forward. But then a lot of you have said, man, I'm getting out of this stock. This is a garbage stock and I don't want to be in it. Either side, I'm with you. I totally understand. But I am going to give you some insight to make you at least think about it. The next thing, after that came out, what did they do? They went and bought another boat. So now they bought 3 boats on May 20th, on May 21st, and on May 23rd. Why is that important? Well, a lot of people were saying that Castor Maritime was diluting their shares by putting a lot of shares out there. They were raising capital. Now, is that a good thing or a bad thing? Well, I think that raising capital is good for a company to grow, right? They bought 3 more ships. Something else I've been seeing in the chat. A lot of people saying a lot of the boats are old. Well, some of the boats are old, but I'm looking at here, it is a 2015 boat, a 2010 boat, and there is a 2005 boat. The thing is, they are ramping up their fleet to be able to handle being able to do business in the dry bulking business. Why is that important? Well, let me tell you why that's important. Well, before I do that, I want to say because of all of the money that they had by raising capital, all 3 acquisitions were financed entirely with cash on hand. They did not have to finance these boats. All right. Now, why is this important? Because there's an index, the Baltic Index, which tracks the rate of these boats that they can charge for the goods. This rate is going up. There's more demand for this. And you know, China is a big player in this because as the country, as the world opens back up, more goods are going to need to be shipped. And China plays a big role because they've got the most population than anybody in the world. So if they're going to need goods, they're going to be looking by air, by train. Well, you can't go take a train to China, but you can definitely take a boat. And this is important in this industry. All right, so real quick, let's get back into the software. Let me get into the software real quick. Here we go. Here's Castor Maritime. Why do I like this? Well, I like it for a couple of reasons. One, the stock's trading at 37 cents today with a value of 68. Value is what we feel the stock is currently worth. The stock is currently trading under its value. That's a good thing, but it is a low dollar stock. Couple of other things I like about it. Our indicator relative value, which tells us if the stock has got the potential to outperform the market, is above the value of 1 on that scaling between 0 and 2. The stock has got upside potential. Now, the safety factor, which looks at the ability for the stock to be risky. The stock is risky. There's no doubt about it. It's got good upside potential, but to get the big pop, you're willing to give up a little risk. And the stock is not in an uptrend right now with a relative timing at 0.12. Another thing, somebody said, well, the stock says that it's a sell. It is a sell because this stock has been beaten down. My first video I did on CTRM said, was this a Reddit move? And I still think that to a certain degree, this is still a Reddit move. Another thing I like about it, earnings per share is positive, and they're growing their earnings at a clip of 19% a year. Any company that can grow their earnings is very attractive to investors. Now, I'm going to give you a little bit more here. I'm going to right-click, and I'm going to view this. I don't want to view the stock graph yet. I want to view the stocks in the industry group. And you know something? There's about 55 stocks in the industry group. Here's some of them that you can take a look at. That's number one. Number two, I'm going to go over to the industry viewer, and I'm going to show you something else. We track 222 industries in the VectorVest system. Look at this. Transportation ship is number 48. The industry is a hot industry. Nonetheless, whether you like CTRM or any other stock in this space, it is a hot industry. So I put all of that together to let you know. Let's go back to the graphs. Let's go to the graphs. Let's go put it on our CTRM. What do I see on the graph? Let's open it up. Let's go put this on a 3-month graph. Here it is. I've talked about CTRM over and over, and I told you that this is a tough stock to hold on to. There is no ifs, ands, or buts about it. The current line of support was sitting at 42 cents. Right now, it's trading at 36 cents today. It's moving down. I'm telling you that if you're not comfortable trading this stock, then don't do it. I am all on board with that. Don't do it. But what I am going to say is that it does have upside potential. If you feel that it's something that you want to take advantage of, by all means do it. But if you don't, by all means don't. All I'm here to do is present you with the facts, to present you with what's out there to help you to make a decision. So with that being said, folks, I want to say thank you for joining me on my first installation of Midday Parlay, where we get a chance to just talk about what's happening hot on a short little tidbit or a snippet of information so that you can take advantage of still your lunch break and rock and roll. With that, folks, let's go see what happens. If you like the stock, get it. If you don't, don't. And I totally understand either way. Don't forget, folks, to hit the like button. And also in the comments, tell me what you think about this segment. Is this something you would really want to see going on? Or, this is not something I want to see. Let me know. Let's get that interaction going. So until the next time, folks, see ya.